Hi, I'm Damona Doy, Extension Economist at OSU, and want to welcome you to a brief discussion of cash flow. Cash flow refers to a summary or a plan of cash income and expenses. You can choose whether it focuses on the business only or is a combined personal and business statement or budget. But if the farm or ranch is intended to stand alone as a business, it's important to look at business cash flow regularly to understand seasonal patterns and to recognize business strengths and weaknesses. Cash flow can be summarized for historical purposes, which we usually refer to as a statement. The cash flow statement is one of 3 financial statements that we encourage producers to develop annually and to analyze for the insights that they provide for farm and business and family. The cash flow statement summarizes information for a period of time, typically a year. As depicted in the chart here, the cash flow statement, together with balance sheets for the beginning and ending of the time period, provide essential information for the income statement. The numbers that are shown in this slide refer to OSU fact sheets that provide more detail along with detailed examples and step-by-step instructions for completing forms. AGEC 751 is the publication number for a fact sheet on the cash flow statement. Cash flow can be predicted or anticipated through a cash flow budget or plan. The cash flow statement often provides a useful reference for a future year, while the plan provides a target for performance in coming months. Statements or plans can either focus solely on the business, or they may include both business and personal income and expenses. What you choose to include may depend on the expected uses. Is it for communication with lenders? And if so, are both farm and personal incomes pledged for loan repayment? That would argue for including both farm and personal income and expenses. On the other hand, if the plan or statement is designed to highlight how the business is doing, then limit the information included to the farm or ranch. In slides to follow, we'll talk about where you find information for the cash flow, how you summarize it, and some of the insights it provides, and we'll reiterate its relationship to other financial statements. Ideally, you have a record-keeping system that lends itself to a cash flow summary. Cash transactions may be documented through a collection of receipts and invoices, plus bank, credit card, loan statements, and notes, the same kinds of things that you save for tax purposes. The tax forms themselves would only be useful for an annual cash flow and still would need to be supplemented with other account statements, as they don't document loan payments, for instance. Software tools today make it easy to sort and summarize records in a variety of ways that can be really useful in decision support. For instance, we've been teaching people how to use Quicken for farm and ranch financial records. Investing some time in learning to use a tool like Quicken gains you the ability to sort and summarize information quickly and easily. With a couple of clicks, you can generate an annual cash flow statement or monthly or quarterly reports. And if you have records for multiple years in the file, you can compare cash flow across years to better understand the variability due to changes in market prices, weather, and so on. Once you have a historical statement, it can be used as the basis for a forward-looking plan. The cash flow statement is organized into sections for cash inflows and cash outflows. Cash inflows include 3 types of items: operating receipts, capital sales, and contributed capital. In the operating receipts section, the totals for crop sales, wheat, canola, hay, livestock sales, calves weaned, hogs, broilers, goats, or other livestock, government payments, LFP, ARC, PLC, conservation, for example, are summed, along with other farm income, such as custom work. Capital sales include the sales of cull breeding livestock, vehicles, machinery and equipment, land or buildings. Any asset that's expected to be used in the operation for multiple years is considered a capital asset. So any income that results from the sale of this type of item is a capital sale. So a bull that's tested infertile and is sold at the local livestock auction is a capital sale, as is the used farm pickup. Contributed capital consists of funds that come from outside the farm business to support the farm. and may come from off-farm income, gifts from relatives, or lottery winnings. So if you inherit $10,000 from Aunt May and choose to deposit it in the farm checking account to be used for farm purposes, it becomes contributed capital. In the cash outflows section, you also have 3 general types of items: operating expenses, capital purchases, and family living withdrawals. Operating expenses include feed, fertilizer, fuel, and lube, repairs, supplies, vet med, and so on. Capital purchases are the outflows of cash associated with buying capital assets. The purchase of a bull to replace that bull that was culled is a capital purchase. Purchase of a boom sprayer is a capital purchase. Purchase of land is a capital purchase. If the farm provides cash for family living expenses, it must also be documented. Any other withdrawals, for instance, to pay child's college expenses or support another business, should also be recorded. The intent with the cash flow statement is to fully capture the cash coming into the business and leaving the business. Here's an example of a cash flow report generated in Quicken. Inflows are summarized using categories established by the user and show the totals for capital sales, government payments, etc., with categories in alphabetic order. Similarly, cash outflows are summarized by category with totals sometimes subdivided using subcategories to capture more detail. Note at the top that you have the option of changing the time period, so you can easily switch to a monthly view or even shorter time frame. Software tools make it easy to quickly gain insights into seasonal patterns of cash surpluses and shortfalls. It also makes it easy to compare years so that you have a record of how high feed expenses were during a drought year, or how much repair expenses may be increasing over time. The list here of sample reports in Quicken further demonstrates the variety of ways information can be summarized with a couple of clicks of the mouse. I personally like the income and expense bar charts and the pie chart shown here with the top 10 expense categories for our sample file. Graphs often communicate better than tables of numbers, and a good software tool makes it easy to create them. Seeing that repairs and maintenance are the #1 expense and the largest portion of the pie may signal that a new investment is needed in some machinery and equipment, or it may mean that better training is needed for hired help. The numbers and visuals are compelling. The manager has to help with the interpretation and understand how to use the signal to make decisions. The cash flow statement can serve as the basis for a forward-looking plan or budget. While history may not repeat itself exactly, it's often a good predictor of the future in many ways. By having a sense of how much is spent on different expense categories, you can focus on managing the important ones. You can also invest relatively more time in looking for outlook information that suggests what to expect for prices in the future for important income or expense items. A cash flow budget provides a target for the upcoming year and allows budget to actual comparisons. By monitoring cash flow regularly, you can stay on target for achieving your financial goals. You can be prepared to take action early in the event of an unexpected downturn in the market or unexpected expenses. Looking at cash flow by enterprise, for instance, wheat, stockers, cow-calf, cotton, you can identify break-even prices and yields. This helps inform your marketing plan, insurance decisions, and perhaps decisions about what to plant or not plant for the coming year. Anticipating cash flow and changes in cash flow when circumstances change is really important. If market prices change for the worse or yields come up short, it may lead to shortfalls that jeopardize the ability to pay bills or make scheduled loan payments or jeopardize the business sustainability long run. It's always better to deal with problems early on as more options are available. So early warning signals from your records and cash flow statements and plans are very valuable. Downturns in the economy often provide opportunities for those who are well positioned. We'll talk more about key farm financial measures in another video, but I want to point out how the cash flow statement contributes valuable information to some of them, particularly liquidity, listed at the top, and repayment capacity, listed at the bottom. Liquidity is defined as the ability to pay bills as they come due in a and cover unanticipated events. So if your farm truck suddenly develops a problem that requires an engine overhaul and you have to round up and sell a couple of calves to pay for it, your business isn't very liquid. A good understanding of cash flow helps the manager decide what level of cash may be necessary in savings or other liquid assets to provide for ongoing expenses as well as emergency funds. Repayment capacity is defined as the ability to repay term debt in a timely fashion. If money has been borrowed for financing, the lender providing the money expects that both principal and interest will be repaid on schedule. Their business is dependent on borrowers following through on that commitment. A good understanding of cash flows and commitments made will point out potential shortfalls and help inform strategies to best deal with problems. A reminder of the cash flow statement role in an integrated set of farm financial statements. A good record of cash income and expenses is absolutely necessary in analyzing the profitability of the operation, as is done with an income statement. You might think of the cash flow statement as one of the essential building blocks in developing the income statement. Balance sheets will also be required to identify the necessary accrual adjustments to complete the income statement. This slide highlights some of the key differences in the cash flow statement and income statement and serves as a reminder of the distinction between cash flow and profitability. It may be tempting to look at the cash balance in a checking account, for instance, and think that it's a signal of profitability. But that isn't necessarily so. Focusing only on cash balances overlooks changes in inventories of feed, hay, supplies, growing crops, and capital assets. It also doesn't capture gains and losses that may have been associated with the sales of assets. In analyzing profitability, we must capture these impacts as well as prorate the expense of owning a capital asset over its expected useful life through depreciation. For example, if we purchase a new farm vehicle for $30,000, we might expect to use it for 6 years and then sell it for $3,000. In analyzing our business yearly profit, we would prorate the difference between the purchase and sale price of $27,000 over the useful life of 6 years. That more accurately matches the expense of ownership with its business use. And as shown here, the cash flow statement may include things that an income statement wouldn't, namely all cash associated with capital sales and contributions, principal payments, and family living expenses. We encourage you to learn more about developing a cash flow plan by reading the OSU Fact Sheet 751. It provides a farm example with detailed explanation as well as a blank form should you want to develop one for your operation. The other publications listed here provide references for related topics. You may also be interested in software tools that assist in financial statement development. FinPack is one example of that kind of tool. Please contact your local extension office or area agricultural economics specialist if you'd like more information or are interested in having a program on this topic in your area.